The home flipping market has encountered significant challenges, with rising home prices and increased acquisition costs squeezing profit margins. According to ATTOM's Q2 2025 U.S. home flipping report, the number of homes flipped dropped to 78,621, accounting for 7.4% of all home sales, reflecting a decline from both the previous quarter and the same period in 2024. The average return on investment (ROI) for flipped properties has dropped to 25.1%, the lowest since Q2 2008, largely due to higher property prices. The gross profit from flipping homes also declined, with the average profit falling 13.6% year over year from $75,000 to $65,300. In Q2 2025, the average cost for home flippers was $259,700, the highest median purchase price recorded. Despite the increase in costs, the median sales price for flipped properties remained at $325,000, resulting in a narrow gap that makes it harder for flippers to generate significant returns. The increased competition from traditional buyers further exacerbates this issue, particularly in high-demand markets. While national trends show a slowdown, some regions are still seeing significant flipping activity. Cities in Georgia, like Warner Robins, Macon, and Atlanta, have high flipping rates, with Warner Robins leading the way at 18.5% of total home sales. However, cities like Seattle, Boston, and Portland show lower flipping rates due to high real estate prices and slower property turnover. Flippers are increasingly relying on cash transactions, which now account for 62.6% of flipped homes in Q2 2025. This trend is driven by the difficulty of securing traditional financing and the need for speed in a competitive market. Additionally, the average time to flip a home has increased to 165 days, signaling a cooling market where demand for flipped homes is starting to slow. Several cities, including Fort Smith, Arkansas, and Green Bay, Wisconsin, have experienced significant declines in profit margins due to high acquisition costs and slow home price appreciation. However, cities like Buffalo, New York, and Tuscaloosa, Alabama, continue to report healthy cash purchases and offer opportunities for flippers who can find undervalued properties. The outlook for home flipping remains mixed. High acquisition costs, increased competition from traditional buyers, and slower home price growth are likely to limit profitability. However, regions with lower costs and savvy investors who can adapt to new strategies may still find profitable opportunities. As Rob Barber, CEO of ATTOM, notes, the era of easy profits seems to be over, but flippers willing to adjust their strategies may still find success in specific markets. For direct financing consultations or mortgage options for you, visit Nadlan Capital Group.